Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to deep dive into the 10-year yield based on technical analysis, finding out where the yields are headed in the near term as well as the longer term. So let's dive into the chart without any delay. Here it is, folks. And again, the first thing we see is that the yields on the 10-year have collapsed over the last 3 trading days. Right here, this is a daily chart. So each one of these represents 1 day of price action in the 10-year yield. 3 days ago, we topped out at 4.3%. We currently made a low today of 4.06%. Now, this was actually on alert. In fact, if you've been following my trading game plans on the Verified Investing YouTube, you really saw this ahead of time, and I want to show you why. So the first thing we're going to take a look at is this, right? And what we could do is we can drag a trend line right through this vicinity. And we can see very clearly that you had this pseudo head and shoulders pattern, right? So if we take out our head and shoulders drawing trend line pattern here, and bear with me as I pull it up, you can see very clearly we had a shoulder, head, and shoulder, okay? And then what you got is what we call a bouncy ball pattern after that, which is where it just kind of hammers, and then it finally breaks through to the downside. So this head and shoulders has officially triggered now. Very crystal clear head and shoulders formation. We triggered as of yesterday. It continued to fall today. Now, with the yields falling, number one, that's good for mortgage rates. Generally, we see mortgage rates near term at lows. But more importantly here, folks, what we're looking at is a hit of a support line in the near term. What we're doing here is taking the September 2024 low on yields that was at 3.6% and connecting it through the low here in early April, which was the Liberation Day sell-off lows. Drag that out, and lo and behold, look at what you get. You literally have yields tagging that trend line. And so in general, what we know from technical analysis and what I've taught you guys is that this was your first starting point, this was your second hit, and this is your third hit. In technical analysis, it's very rare you break through on your third hit. More likely than not, what we see is a bounce on the third hit, and then the fourth hit starts to be ones that are likely going to break lower. And so if we have to game this out, which is part of the job of being a technician, in general, odds favor a bounce, maybe back to the scene of the crime on the 10-year yield, and then a break to the downside where the head and shoulders will continue to play out. Now, if we look at this, so near term, I want to be clear on this. Near term, we're favoring a bounce here. Again, whether it's a 0.1% bounce or a little less or a little more, that's unsure of. But we should still get a bounce of sorts here, maybe back to 4.15, maybe 4.2. But once that occurs, the next time down, which will likely happen, you then favor or expect a potential breakdown. And to figure out the downside target, so again, just to be clear, the near term, meaning the next few days, we're favoring a bounce, right? A bounce in the near term. And then over the midterm, that's where you expect lower price action. And to figure out the target here, what we do is we calculate the head and shoulders measured move, right? So if we take this down to the neckline, we'll go right there. So the high of the head to the neckline right here. And then we map that out to the break point of the neckline. When did the neckline break? This is, by the way, called the neckline. We have a break right here. And so this now gives us our downside target of 3.72%. And so while we're expecting a bounce in the near term, the longer term signals a potential further downside move to 3.72% on the 10-year yield. And what's interesting here is you start getting into this lower range. Look at what we start to come into. And I love kind of extrapolating out here so that we can really see where we're going. But really what we're coming into is, look at this area right down here. So you start to get back to levels we haven't seen since September of 2024, basically 1 year ago. And that would be your midterm, zone of technical support. All right. So again, near term, expecting a little bounce. Third hit of a trend line generally does not break. So we expect a bounce. But then the next leg down, a potential breakdown to the target of the head and shoulders here at around 3.72%. All right, guys. So I wanted to enlighten you on both what we're expecting near term as well as on the midterm. Now, long term is harder to generate out, meaning like, if someone asks me where yields will be in 10 years or 5 years or even 2 years from now, that's much, much harder to figure out. because obviously there's a lot of variables. How much US debt is going to come into play? What's the de-dollarization kind of going on at this point? Where do we see the pressure from the presidential powers on the Federal Reserve? All of these are unknowns at this point, which can definitely affect yields in the longer term. Just a reminder, the Fed controls the short end of the curve, not the long end. But very interesting chart here, guys. Thank you so much for tuning in. Come check us out at verifiedinvesting.com, and I'll be back with more videos soon. Take care.